Welcome to Global Experts Network Learning Platform. Today we begin Module 5, Equity Investment Analysis. We'll move beyond general analysis to master the specific tools used to value and select stocks in the global markets. Our journey today covers equity markets and stock types, the top-down framework of fundamental analysis, and the core valuation models, including DDM and DCF. We will also explore technical analysis and the professional format of equity research reports. First, what exactly is equity? It represents ownership. As a shareholder, you own a proportional stake in a company's assets, earnings, and future growth. It's the primary engine for long-term capital appreciation. We distinguish between common stock, which offers voting rights and unlimited upside, and preferred stock, which prioritizes dividends. We also categorize stocks by style, growth versus value, and by market capitalization, ranging from micro-cap to large-cap giants like Apple. To find the best investment opportunities, we use fundamental analysis. This is a structured approach to determining a stock's intrinsic value. If that value is higher than the market price, we have a potential buy signal. We follow a top-down framework, starting with the macroeconomy and drivers like GDP and inflation, moving into industry analysis using Porter's 5 forces, and finally performing deep company analysis focusing on business models, moats, and financial health. Once we understand the company, we must price it. We use various equity valuation models to translate our analysis into a target price. Always remember to use multiple methods to triangulate a valuation range. The dividend discount model is best for mature dividend-paying stocks. For more complex or capital-intensive companies, we use free cash flow to firm or free cash flow to equity models, which value the company based on its ability to generate cash after all expenses. While DCF gives us an absolute value, relative valuation helps us compare a company against its peers. This is where trading multiples like PE and EV to EBITDA become essential tools for the analyst. Trading multiples provide a quick sanity check. We look at PE for general equity, PB for banks, and EV to revenue for high-growth tech. By combining these with our DCF and DDM results in a football field chart, we derive a robust and defensible valuation range. If fundamental analysis tells us what to buy, technical analysis tells us when to buy. It focuses on price action and volume patterns to identify market trends and timing. We analyze primary signals like uptrends and downtrends. Key indicators like the relative strength index warn us of overbought or oversold conditions, while MACD helps us time entries and exits by measuring momentum strength and crossovers. The output of all this work is the Equity Research Report. This is the primary communication tool between analysts and investors, providing a clear investment thesis and recommendation. A professional report includes an investment summary, company overview, financial analysis, and valuation. We also distinguish between sell-side analysts at investment banks who distribute research publicly and buy-side analysts at fund managers who produce proprietary research. To see these concepts in action, let's look at a real-world case study. Safaricom plc, the largest telecom in East Africa. This example perfectly illustrates how moat and valuation thesis interact. Safaricom's premium valuation is justified by its dominant M-Pesa fintech platform and massive network effects. However, an analyst must also weigh risks like currency depreciation and expansion costs in new markets like Ethiopia. This is the art of equity analysis. Even the best analysts can fall into traps. To maintain professional rigor, you must be aware of common valuation mistakes that can derail your investment thesis. Avoid over-reliance on a single model or anchoring to market prices. Be conservative with terminal values and never ignore working capital. You'll practice avoiding these pitfalls in your upcoming stock valuation project, where you'll build your own bull and bear cases. Let's quickly recap how we use technical indicators in practice to confirm our fundamental findings. Volume and momentum are your best friends for confirmation. Remember, an RSI above 70 suggests a stock is near overbought, while a bullish MACD crossover can confirm a trend change. Use your formula reference sheet to master the calculations for WACC, PEG ratios, and DCF enterprise values. Now it's time to test your knowledge. We'll conclude with a quiz and a review of the key terms every equity analyst must know. Can you calculate the DDM value? Do you know the difference between FCFF and FCFE? Mastering terms like intrinsic value and moat is essential for communicating your findings to institutional clients and fund managers. We have covered a tremendous amount of ground in Module 5. From stock classifications to complex valuation models, you now have the foundation to perform professional-grade equity research. Thank you for learning with Global Experts Network. I look forward to seeing you in Module 6, where we will dive into fixed income analysis. Please subscribe to the SNB Experts YouTube channel for more advanced insights. Goodbye for now, and happy investing.